Hi, this is Mike Maloney, and I've got two pieces of really great news to share with you. One, Jeff Clark, the former editor of Casey Research's Big Gold newsletter, has joined the team at goldsilver.com. And two, our newsletter is going from being published one day a week to being published twice a week. So it will be coming out now every Tuesday and Thursday, and Jeff will be writing most Thursdays. But one of the things you really need to do is take a look at his most recent work, The Number One Reason This Gold Uptrend is Here to Stay. Jeff has identified many fundamental factors that add up to a tectonic shift in the gold market, and some of them are that some of the big hedge funds and fund managers, people that were selling off some gold positions just a few years ago, they're back, and they're buying in a big way. And two, bullion coin sales are way up. There's other people that have covered this, but coin sales are increasing. Investment in GLD and SLV are all increasing. And one of the factors that Jeff has talked about here, negative interest rates, are something that has everybody really worried. Like I've said many times before, negative interest rates is a concept that people wouldn't have even considered. Nobody had ever thought about the possibility of negative interest rates because it just sounds so incredibly absurd. So before 2008, there's no economist that was talking about this. There was no newsletter writer or commentator. It had never happened before in all of human history. And here we are with interest rates in countries that represent 25% of the world's GDP. And one of the things that's interesting, he says, it is not far-fetched to think that gold could end up replacing sovereign bonds as the preferred safe haven among investors. Now, this is something that I wrote about in my book back in 2008, that all countries on the planet have been borrowing and spending, and the U.S. Has been really leading the charge, the U.S. and Japan. And they just have this problem where they borrow every single year and they spend more than their income, and it's going to end up in disaster one day. And there will come a time when Uncle Sam is looking at you and saying, come on, just loan me a little bit more, just one more time. And you're going to say, I think I've loaned you enough. I've been loaning you currency ever since World War II. You've only been able to pay back more than you've borrowed for 3 years out of all that time since before World War II. And I just don't think that I'm going to be getting my currency back if I loan it to you. So I think I'm going to invest in gold instead. And that is what Jeff is writing about here, is that it's not far-fetched to think that gold could end up replacing sovereign bonds as the preferred safe haven among investors. And Ken Hoffman, senior metal analyst at Bloomberg Intelligence, said that an increasing number of hedge fund managers are seeing gold as a currency. And that is when everything shifts, when people start treating gold as currency. And I said that this will happen many years ago. I put that in my book, that there will come a day where people are rushing back to gold and silver because gold and silver are money. And that is when everything changes and the really, really big gains come. So I urge you to take a look at Jeff's newsletter here. Thanks for listening. Please go to goldsilver.com and sign up for the free newsletter. It'll be in your email box twice a week. And if you liked this video, please like it and share it and subscribe to the YouTube channel. Thank you very much for listening. We'll see you next week.